The Vice President of the United States stood at the State Department facing representatives from more than 50 nations and delivered 5 words that could permanently reshape the silver market. Not we might, not we're considering. He said, "We will establish price floors." JD Vance looked directly at delegates from 50 countries and declared that the United States is going to guarantee a minimum price for critical minerals, and as of November 2025, silver is officially on that list. Your silver. The silver locked in your safe. The silver held inside your IRA. The silver sitting in that tube of Eagles you bought 3 years ago when everyone told you that you were out of your mind. The Vice President of the United States just told the entire world that the government wants that metal to be worth more, not less, more. And the mechanism he laid out is tariffs, adjustable tariffs, meaning if China or anyone else tries to dump cheap silver onto the market to crush your investment, the United States government will impose tariffs to keep the price above a guaranteed floor. This is not a rumor. This is not a screenshot circulating on social media. This happened today, February 4th, 2026, on camera, at the State Department in front of the world. And by the end of this video, I'm going to walk you through exactly what this means for physical silver, what it means for paper silver, what it means for short sellers, and whether $1,000 silver is pure fantasy or simply a question of time. But first, I need to show you something that convinced me this announcement was coming. Snorts. Something so fundamentally broken that I honestly don't understand how this system hasn't already collapsed. Welcome to the hidden economy. If you're new here, hit the like button and subscribe right now because the algorithm buries content like this unless you engage. And this is information Wall Street absolutely does not want spreading. If you watched my last video on the Epstein email leak and what it signals for gold at $10,000, what I'm about to show you about silver is the other side of that exact same coin, literally. Now let's look at what Vance actually said, because the precise wording matters. Here is the direct quote from today's ministerial. These reference prices will operate as a floor maintained through adjustable tariffs to uphold pricing integrity. He went on to say, "We want to eliminate the problem of people flooding our markets with cheap critical minerals to undercut our domestic manufacturers, because we know that as soon as they have undercut domestic makers, they leave the market. And the people who did the undercutting then jack up prices to a completely unfair level." Read that again. The Vice President of the United States just described on the global stage a strategy where the government uses tariffs as a weapon to prevent anyone from selling critical minerals below a certain price. That is a price floor. And he didn't stop there. He added that the United States is proposing the creation of a trading bloc among allies and partners, one that guarantees American access to industrial capacity while simultaneously expanding production across the entire bloc. Secretary of the Interior Doug Burgum confirmed that 30 countries have already expressed interest in joining. This is not a low-level press release written by a junior aide. This is the second highest official in the U.S. government telling 50 nations that America is constructing an economic alliance specifically designed to control the pricing of the metals that power the modern world. And silver is one of them. Now I need you to understand something critical, because just last week the media told you the exact opposite. On January 30th, Reuters reported that the Trump administration was backing away from individual company price floors. The headline made it sound like price floors were finished. Australian mining stocks sold off. Silver investors panicked. The narrative became that the entire strategy was collapsing. That narrative was wrong. What died last week was one approach: individual deals with individual companies, slow, costly, politically messy, negotiated one at a time. That model was never going to scale. What Vance announced today is something entirely different. This is not a deal with one company. This is a system. Tariffs applied across an entire trading bloc. If the global price of silver falls below the reference level, a tariff automatically activates to lift the import price back to the floor. No congressional funding required, no one-off negotiations. The tariff itself is the enforcement mechanism. And the president already has the authority to impose it under Section 232, which Trump signed on January 14th, declaring critical mineral imports a threat to national security. So the media said price floors were dead. And today, a far larger and more powerful version of price floors was born. The market hasn't figured this out yet. When it does, what follows could be historic. But before we talk about price targets, you need to understand why the government is doing this at all, because that answer tells you everything about where this is headed. On November 7th, 2025, the U.S. Geological Survey did something it had never done before. It added silver to the official critical minerals list. Silver had never been included, not during World War II when the Manhattan Project borrowed 430 million ounces of silver from the national stockpile to build the atomic bomb, not during the Cold War, not during any crisis in American history, but it's on the list now. Silver now sits in the same legal category as uranium. That designation unlocks federal investment, expedited mining permits, stockpiling authority, and yes, price floors, all under the banner of national security. Before I explain why, there's something I want you to hold in your mind, because we're going to come back to it later. And when we do, it will completely reframe every number I'm about to show you. 5 government agencies, including the Department of Defense, stopped reporting how much silver the U.S. military consumes. They stopped in 1996. No explanation. 1 year, the data existed. The next year, silence. 30 years of darkness. Remember that. You already know silver is being consumed. Solar panels, AI servers, electric vehicles, cruise missiles. You've heard those demand figures before, so I'm not going to repeat them. Instead, I'm going to show you the number nobody is talking about. 820 million ounces. That is the cumulative supply deficit over the last 5 years. 5 straight years where the world used more silver than it produced. An 820 million ounce shortfall. That's equivalent to 10 months of every silver mine on Earth operating at full capacity. 10 months of global output consumed and never replaced. And remember, 71% of silver is mined as a byproduct of copper and zinc. That means higher silver prices don't suddenly create more silver. There is no emergency switch, no rapid response, no quick fix. And the people in charge just admitted it. That's why Vance made this announcement today. But there's a number behind that number that's far more dangerous, and almost nobody is paying attention to it. 356 to 1. That is the current ratio of paper silver claims to the physical silver backing them. You've heard this ratio before, but I don't think people fully understand what a price floor does to it. Let me show you. Right now, the silver futures market functions because both sides believe they can win, longs believe prices will rise, shorts believe they can push prices lower, or at least roll positions indefinitely and avoid delivery. That balance keeps the paper market alive. But what happens when the US government announces it will not allow the price to fall below a certain level? If you're short silver, your entire thesis depends on prices going down. You sell high and buy back lower. But if the government has declared it will use tariffs to defend a floor, your downside as a short is capped, not by market forces, but by government policy. Your maximum gain becomes the distance between today's price and the floor. Your maximum loss remains unlimited. That is a terrible trade. And the traders managing massive short positions at major banks know it. There are enormous concentrated shorts on the COMEX, positions that have existed for years, used to cap rallies and suppress price spikes. Those positions just became exponentially more dangerous because the government has now said it will defend the downside. The shorts are no longer fighting the market. They are fighting the United States government, and historically that is not a position you want to be in. If those shorts begin covering, if they start buying silver to exit, the 356.1 ratio doesn't unwind gradually. It snaps, and there isn't enough physical silver in the vaults to absorb it. COMEX registered inventories are down roughly 70% since 2020. LBMA stocks are down about 40%. Shanghai inventories are at their lowest level since 2015. The silver isn't there. It's been consumed, destroyed, embedded into solar arrays, data centers, and missile systems, and it's never coming back. That's the real story behind the ratio. Not just that it's broken, but that policy just made it impossible to maintain. And then China made it worse, much worse. On January 1st of this year, China imposed new restrictions on silver exports. Only 44 companies nationwide now qualify for export licenses. Hundreds of smaller refiners that supplied global markets for decades are effectively shut out. China controls 60 to 70% of the world's refined silver supply, and they just tightened the choke point. State media described the move as upgrading silver from a common commodity to a strategic resource. That is the same language China used before restricting rare earth exports. Same playbook, different metal. Elon Musk even commented saying, "This is not good. Silver is needed in many industrial processes. Here's what matters." The 30-country trading bloc Vance announced today is a direct response to China's move, and the countries lining up to join tell you everything. Think about silver production. Mexico is the world's largest producer. Peru is second. Chile, Australia, Poland, and the United States round out the top tier. Now think about which countries would benefit from higher silver prices, and which would join a US-led bloc with price floors. Mexico, Peru, Australia, these are allies, trading partners, mining nations. If they join, and Burgum says 30 countries already want in, the majority of global mined silver would sit inside a system with a guaranteed minimum price. Everything outside the bloc, primarily China, faces tariffs. So China restricts refined silver exports. America responds by locking up mined supply and taxing anything China tries to sell. That's not a trade war. That's a siege. Neither side is backing down. On February 2nd, just 2 days before Vance's announcement, The White House launched Project Vault, and this deserves your full attention because almost nobody is analyzing it properly. Project Vault is a $12 billion critical mineral stockpile, $10 billion from the Export-Import Bank, the largest loan in the bank's history, on a 15-year term. Another $167 billion in private capital oversubscribed, meaning demand exceeded capacity. Participants include General Motors, Boeing, Stellantis, Corning, GE Vernova, and Google. Commodity traders Hartree Partners, Trafigura, and Mercuria handle logistics. Ask yourself why Google is involved. Google doesn't build cars. Google doesn't build weapons. Google builds data centers, and AI servers use 3 times more silver than traditional servers. Google isn't investing because it loves mining. It's investing because it fears not having enough silver to build the infrastructure it needs. When the largest tech company on Earth starts stockpiling industrial metals alongside defense contractors, that's a signal the market hasn't priced in. And the structure of Project Vault matters. Manufacturers receive guaranteed access to critical minerals at fixed prices. Read that again. Fixed prices. That is a price floor embedded inside a government-backed stockpile. This isn't paper. This isn't futures. This is the U.S. government buying physical metal, storing it, and guaranteeing access. If prices spike, they're protected. If supply collapses, they're protected. This is economic warfare infrastructure, and it was built in weeks. Look at silver's price action over the past year and tell me the market is irrational. Silver rose from $31 in January 2025 to an all-time high of $120 in January 2026. Nearly a 4x move. Then it crashed 27% in a single session on January 31st, the worst drop since 1980. 4 days later, it rebounded to $90. That's a 190% gain in 12 months, even after the worst crash in 46 years. What kind of asset behaves like that? One the world cannot function without. The banks are split. Citi says $150 within 3 months. Goldman sees $85 to $100 as the 2026 average. JP Morgan's Kalanovich calls it mania and targets $50. Bank of America ranks silver as the most bubble-like asset on Earth. Here's my honest take. Both sides are partly right. The speculative blow-off was real. The crash proved leverage is lethal. Silver does not only go up, but the deficit is real. China's restrictions are real. The critical mineral designation is real. And the price floor announced 3 hours ago is real. Those are policy decisions, and policy doesn't collapse 27% in a day. Now about $1,000 silver. I owe you honesty, not hype. At $90, $1,000 is 11x higher. That would imply a gold to silver ratio of 5:1, something we've never seen in modern history. So no, $1,000 silver isn't coming next week. But 12 months ago, silver was $31. If I told you it would hit $120, you would have laughed. If I told you silver would be declared critical, stockpiled, and protected by tariffs, you'd have said I was insane. It all happened. So the real question isn't whether $1,000 is crazy. It's what conditions would make it possible. Gold at $10,000, a compressed ratio, continued deficits, a currency crisis. The 1980 silver peak of $50, adjusted for inflation, ranges from $150 to $1,400 today, depending on methodology. That's Ted Butler's analysis. At $90, silver is still historically cheap. $1,000 isn't a 2026 event. But this decade, if gold hits $10,000 and the ratio tightens, $300 to $500 becomes realistic. And from there, the leap to $1,000 shrinks fast. But price targets aren't the most important thing. A price floor changes the nature of an investment. Before today, silver had unlimited downside. Dumping, shorting, policy shocks. Now, the government intends to defend it. Tariffs activate, supply shocks get absorbed, producers get guaranteed minimums. This doesn't eliminate volatility. It doesn't stop crashes. But it creates a structural backstop silver has never had, not once in its entire history. Your downside is policy. Your upside is physics. Solar needs silver. AI needs silver. EVs need silver. Weapons need silver. And nobody has replaced it. And now we return to what I told you to remember. In 1996, 5 government agencies stopped reporting military silver usage. The Silver Institute doesn't count missiles, satellites, radar, naval systems, none of it. The most detailed silver accounting on Earth has a hole the size of the U.S. military. The 820 million ounce deficit doesn't include a single ounce consumed by the largest military ever assembled. The U.S. has launched over 2,300 Tomahawk missiles since 1991. Each contains silver, anywhere from 15 to 500 ounces, destroyed on impact, never recovered, never counted. Multiply that across the Navy, the Air Force, radar, communications, and guidance systems. None of it is in the data. The real deficit could be far larger. And the same government hiding the numbers just told you silver is critical to national security and announced price floors. Draw your own conclusions. So where does that leave us? 5 straight years of deficit, 820 million ounces short, minimum. China locking refined supply, critical mineral designation, Section 232 authority, Project Vault, tariff-backed price floors, short sellers now opposing U.S. policy, and 30 years of missing military data. These aren't opinions. They're documented facts. Is $1,000 silver guaranteed? No. Is it mathematically possible? Yes. Is the direction clear? In my lifetime, it's never been clearer. Governments don't build $12 billion stockpiles for metals they think are falling. They don't form trading blocks for overpriced commodities. They don't assign national security status to surplus materials. They're telling you, today, on camera, what matters. The question is whether you're listening. To the skeptics, you may be right in the short term. Silver can crash again. Leverage can destroy you. I will never tell you to mortgage your house for silver. But answer this. If silver is hype, why is the U.S. stockpiling it? If it's a bubble, why announce price floors? If it's overpriced, why is China restricting exports? If it's mania, why are Google, Boeing, and GM racing to secure supply? Bubbles don't get national security status. Bubbles don't get price floors. Bubbles don't get 15-year stockpile programs. Silver isn't a bubble, it's a battlefield. In my next video, I'll break down the actual price floor levels being discussed behind closed doors. Vance said reference prices, but the existing contracts, the MP Materials deal, the rare earth investments, already tell us a lot. When you see the numbers, it will change how you view every ounce you own. Subscribe so you don't miss it. Drop a comment. What do you think the silver floor should be? $100, $200, higher? I read every single one. And share this. This is 3-hour-old breaking news. Most people don't even know it happened yet. By the time mainstream finance catches up, the market will already have moved. I'll see you in the next one.